Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman here with Baris Serifsoy. Great to see you. Thanks for the time.
Likewise, Tim, good to see you again. How are things?
Very well, thank you. So your background is literally a PhD in finance. You're a CFA and FRM charter holder. You're an ex-UBS Managing Director, author, lecturer. And with that in mind, could you tell us about your background and your journey to Bitcoin?
Of course. Well, thanks for giving me the opportunity, Tim. So, yeah, as you say, I'm a typical trade fi guy, I would say. And see, if you're on Twitter then or on X, then it sort of feels almost like an insult. But that's just the way it is. I'm in my late 40s, so I did have a life before Bitcoin, and was born and raised in Germany. My parents are of Turkish origin, so they came to study in Germany and then just stayed, and then I grew up there. But for the past 15 years or so, I've been living in London. Yes, I did my PhD in most of it in Germany, but parts of it also in Philadelphia and Wharton. And then I've been like what do you call a lifer at UBS. I've been there for 15 years almost before I left in 2020. Did a number of locations, various jobs there, a lot of it in wealth management, where I looked after very wealthy individuals and family offices. And the interesting thing is about when you work for a big corporate like that, you really don't look very much outside of that universe. So you're very much in that soup, let's say. And also there's so much compliance and regulation built around you, that you can't even look at particularly interesting investment opportunities. So you're really literally forced to buy either an ETF or a managed account sort of solution, which are, as you know, fairly plain vanilla and boring. So only when I left 2020, actually, I started looking at Bitcoin, because I was now liberated and I was thinking about doing my own business. And a good friend of mine has been in Bitcoin for a long time. In fact, he has done 2 documentaries on Bitcoin. So I was like, okay, what is this stuff? And I started buying into it, but was always very skeptical and still this trade fight type of hat on. And of course, unsurprisingly, the moment I had the first negative news on it, and at the time it was Tether, whether they actually are legit, are they backing their currency properly with underlying assets. The moment I read about it, and the moment Bitcoin dropped on one day by 20%, I sold everything. Made a fantastic 100% gain. I was very proud of myself, but obviously that was stupid. Yeah, that was when Bitcoin was around, I don't know, 10,000 maybe. And yeah, then I've been observing on the sidelines and saw the whole Sam Bankman-Friedman episode coming and going. And that's when it struck me, and I realized this is not going to go away anymore. So if something like that, and that was like the fifth or sixth scandal in a row that hit Bitcoin, and despite all of that, it just remained very robust. And that's when I decided for myself, okay, this is here to stay. It's a bit like gold, because in the end, the reason why people believe in gold is also not really that rational, right? So it has no real value other than maybe 5% for some jewelry or things like that. But other than that, it's just the belief that it is valuable because it's scarce, you can trade it and all of that. And Bitcoin does all of that in better. Yeah? So that's when I really got orange pilled, so to speak. I convinced myself in the end, and have been on that journey since. And then obviously, like you and the others, we all picked up on MicroStrategy and other companies in that sphere. And that's when I really started looking at it in more and more detail. Yeah.
How did you initially come across MicroStrategy?
The good question. I think again, the friend of mine, he mentioned it to me, and I was watching some of his videos. At the beginning, I found it really bizarre, and I thought this is a strange animal, and I didn't quite get it. But then once I started digging into it, I understood that this is actually like a very cheap hedge fund that you can buy into. He's leveraging it. He's shorting a dollar. He's buying Bitcoin. This makes a lot of sense if you believe, and that's maybe one thing I wanted to still mention is, I mean, I'm a kid of the 90s, so inflation was not an issue. There were no wars. Everything was hunky-dory, lots of growth. But that's not the case anymore. So we will definitely see a period in the next 10 years where inflation is a major topic. Yeah? I mean, look at what we had to deal with as a globe. Yeah, we had a global financial crisis, various wars, COVID. All of that basically meant that governments just kept on issuing debt. And I'll just give you an example. When the Germans lost their First World War, you had a short-lived republic called the Weimar Republic. And one of the issues why it became a stillbirth was it had to burden a lot of the reparations after the First World. So they were blamed for everything, and they had to pay a lot, the French and the English in particular. And so at the time, they had a debt to GDP ratio of 50 to 60%. And that was already, at that time, too much. And the Reichsmark, so the predecessor to the Deutschmark, completely spun out of control. They started printing money like there's no tomorrow and had hyperinflation. And literally 2 years later, the debt to GDP ratio was 2%. So all of that debt was completely inflated away. And that's maybe an extreme example. And I don't think we'll get to anywhere near that, I hope. Yeah. But it just goes to show that inflation needs to be really taken seriously. And yes, I grew up in Germany, which is a very stable, very wealthy country. But as I said, my parents are from Turkey, and in the 90s, Turkey saw a lot of growth, but also lots of inflation. So they had 100+% inflation. And so I could see firsthand how it actually feels if you go there once a year for your summer holidays. And every year the prices have basically doubled and tripled. People have completely lost the sense of what things are worth. They were just converting it back to hard currency just to understand this. Yeah. And so that's why I feel quite strongly about inflation, that this is a really serious thing that we have to consider. And Bitcoin, not only, but Bitcoin alongside gold and maybe real estate are the only ways to protect yourself. So maybe last point on this. So a lot of people on Twitter are clearly here to make a lot of money and become rich from Bitcoin. And that's fair and legitimate. But I think it's not only that, it's also staying wealthy. And that's why when I think about my clients, a lot of them start asking me, what do you do? Do I need to be invested in Bitcoin? And the answer is yes, to a certain extent, you should.
Hey guys, this episode is brought to you by OnRamp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the OnRamp team. Go to www.onrampbitcoin.com. How do you think about the range of an allocation to Bitcoin? Because when I first heard the 1%, 2%, 5% allocations from 100 total percent standpoint, I thought that's really low. But then through more conversations, I realized that 5%, a 5% allocation for a lot of traditional finance managers might be almost like the maximum amount that they would allocate to any one category. Do you have you heard that view? Do you share that view? And how do you think about that when it comes to Bitcoin?
Yeah. So, I mean, I personally have probably now, I would say 30, 40% Bitcoin exposed, either directly in Bitcoin or via MicroStrategy or Semler and some of the other startups. But to be fair, I'm probably, in terms of risk appetite, far more comfortable than somebody that has hundreds of millions, yeah, and needs to think about generational wealth. How can he pass that on to not only his kids, but it's far-fetched ancestries. And so they need to be more careful. And they're coming from a very different world. So they come from a very low volatility portfolio environment where a lot of it is just in cash and in bonds. So what I did look at in detail, and some of the clients I sometimes consult on this matter, is I just said, look, if you look at your current portfolio, which is maybe government bonds 70% and 10-15% in corporate bonds to have a bit of higher yield, and maybe a bit of real estate investment trusts to get some exposure there as well. If you just get rid of those higher risk, and so the corporate bonds and the real estate, and replace that with Bitcoin, let's say up to 20%, but let's start with 5%, yeah. Then yes, you will have higher volatility because Bitcoin has a volatility at the moment of around 38-40% per annum. Obviously, that's far higher than a corporate bond, and far higher than a treasury or a 10-year government bond. But what they're sometimes forgetting is that volatility in a portfolio context also takes into account correlation. And the correlation is nil, literally nil. So I've run the numbers a number of times over the last 4 years, and correlation between Bitcoin and all these fixed income instruments is very close to zero. That means if you put them in a portfolio together with these, then the actual overall portfolio volatility will be far less bad as you would hold if you just hold Bitcoin by themselves. So I think depending on the risk appetite, I would definitely say you should have 5 to 20% in Bitcoin, because the one thing that people are not understanding is if you don't have it, you will definitely not beat inflation and you will lose money. So it is actually not really optional. You need to have some of it in there. And yeah, replace the riskier stuff in your portfolio that you used so far to have higher yields, corporate bonds or even equities, and replace them with Bitcoin. They will have higher volatility, but because the correlation is so low, the overall result is not as bad as you might think. Yes, you have to probably accept to a certain extent a bit more volatility, but it's worth it.
So you're using the example in the range of 5 to 20% allocation to Bitcoin. The leading institutions in London, you can tell me whether I'm wrong or right. Over here, BlackRock, Fidelity, they're saying 1%, 2%. Is it similar over there? And do you think it's far-fetched to say that eventually institutions might recommend more than 5%?
I think that the Americans are way ahead of us. I mean, even 1-2% is groundbreaking, and it's all about getting people comfortable with it, right? So it makes no sense to start off with 10% or even more. You should start out with 1%, see how it goes, see how it feels. How does it feel to you if there's a drawback by 20-30%? Can you sleep at night? You will definitely sleep better if it's just 1%. I think in the UK, the FCA, our regulator, so the equivalent to the SEC, is far more hostile towards it. It's quite difficult to get exposed to Bitcoin. It's possible. It's not impossible. So that I don't know any major bank that actually has a Bitcoin allocation. So you need to go to some independent asset managers. They will do it clearly. But if you go to the big banks that are regulated heavily, I would be very surprised if you heard from anyone that they have a strategy on Bitcoin.
Do you think it's easier in London to get exposure through the proxy of MicroStrategy, or if you don't go to more of an independent brokerage, or what's the reality
Yeah, no, I
on
think
that, you
so.
think?
I think it's definitely the easiest way to get exposure to it. You can with some of them you will be able to, if you waive all your rights away, get exposure to the ETF, surely. But it's going to be all execution only, so it can't be really advised. So that's why unless you're an investor that follows the markets and is interested in that topic, you may not really get that proposal from a big regulated bank. If it's a small boutique investment firm or family office, clearly they have less constraints, and if they have a view on it, then you can follow that clearly. Yeah.
And when you say sign your life away, you're basically signing a waiver absolving them of any
Yes.
liability.
Yeah. Yeah.
Like,
Yeah.
hey,
Exactly.
I
So
know that
it
this
can't be
is,
an advised trade. It would have to be an execution only trade normally.
got it.
Um,
Where you go to them, they're not soliciting you.
Yeah,
Got it.
yeah, exactly, absolutely. Yeah, they could even mention that you can trade it, but they will then say you're on your own, so we have not given you advice. It's just on our platform. If it were that, but even that, I doubt most of them would offer you.
Got it. So, what are you focused on these days? You mentioned doing some consulting. Anything else on your dashboard right now?
Yeah, yeah. So I think there are a few things. So I have a day job, and I'm a partner in an M&A boutique. So we buy and sell on behalf of our clients renewable energy assets. So we sell companies in that space, or we buy companies in that space. But then in my time that I don't commit to it, I do like writing quite a bit. So I wrote a book some time ago. I'm thinking about maybe something more Bitcoins focused now. I'm obviously quite active on X to and give my views on different Bitcoin related companies. So and the thirdly, as I said, there are sometimes families that ask for for my views and how strategic asset allocation would be good for them to incorporate Bitcoin in their thinking. So I think those are the main things. Yeah.
How do you think through? I know you recently posted some analysis on Semler Scientific on X. How do you think of MicroStrategy versus Semler, and maybe even some of the smaller ones as far as the different
Mm.
the different market caps, and maybe making the case that something with a smaller market cap has more room to run, so to speak. Is that your view, or how do you think through those?
That's a very good question. So I do follow probably 7, 8 different companies that have adopted Bitcoin for their treasury. And I would say there's the one and only MicroStrategy with a crazy guy that is just so all in like nobody else. And he has bet his life on it. And I think it's very impressive how he has showed his vision, and he has also, built the path for others. I mean, it is remarkable what he has done. Yeah? But it's not without risks. I think there are certain dependencies that Michael Saylor will be dependent on, and that is volatility. So he needs volatility to be able to keep going. Yeah? Um, and that's why I have a large allocation to MicroStrategy. But I actually personally, and that's probably my boring TradeFi background. I personally like Semler better because it is a business that has very attractive cash flows. It has room to grow on the operational side if some of their products come through. At the same time, they adopted this a similar strategy, but maybe not to the same extent, and they definitely have see it as a Bitcoin and corporate business next to each other. Whereas for MicroStrategy, it is really all about Bitcoin. So it really depends on your risk appetite. I think if you want to really play big, then MicroStrategy is probably going to go further, but it is going to be more volatile than Semler. Semler is a bit more conservative in comparison. At least it feels like that, even though it's a much smaller company, funny enough, so it should be actually riskier. And then you've got all these later adopters. In fact, we created a small new group in X community called Wave 2 Corporate Adopters. And there I'm trying to post news on the various different companies that have started it. And of those, very few, I mean, the ones, and I bought quite a few of them, but only some of them actually have implemented it. So they have started buying Bitcoin, which is great. But others have just announced it months ago and haven't done anything about it. So I do wonder whether they just wanted to be on people's radar and it was more of a PR gag, or whether they actually are genuine about implementing a Bitcoin strategy. So to be seen. Doesn't mean that they're bad. I mean, there's actually one or two pharmaceutical companies that I actually wouldn't have looked at before, and now I do invest in them, and I do look at them, but they have so far not done anything on Bitcoin. So it's a bit interesting that they announced it.
The Bitcoin for Corporations conference is coming to Orlando May 6th and 7th. Receive 20% off admission by going to microstrategy.com, selecting Bitcoin for Corporations, and using discount code KOTZ at checkout, and I'll see you there. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. How do you think about Bitcoin adoption in general over the next decade? So like 2025 to 2035.
Yeah. So I actually, before we had this chat here, we said, okay, why don't we talk about adoption more generally, right? So then I reminded myself that back in June, I actually spent a lot of time putting a post together for X, where I was exactly talking about that. And the way I was thinking is that you probably have got at least 3 or 4 scenarios that could happen. First of all, as I said, the going in position is we will most likely have more inflation than we had before. So the next 10 years will be a more inflationary environment given the debt to GDP levels. And then there are various outcomes. And so my base case, which I said at the time, I said 50%, it's probably still around that, is that you've got the governments of the big countries are just continue to muddle through as they have been doing in the last few years. They are having it sort of under control. The debt levels. AI on balance will help them to become more efficient, but the times where we have very low inflation will still be over. So maybe you have 3 or 4% instead of 2. And that will mean there will be some gradual adoption of Bitcoin, and it will become a serious complementary store of value alongside gold, real estate, collectibles, equities, whatnot. And so in that scenario, what I had said, and I mean the numbers are obviously arbitrary, but it's just to give you some framework how I was thinking about it. I said, okay, look, you might end up with 25% of so the market cap of Bitcoin may get to 25% of the market cap of gold, and then a few percent of the collectibles and real estate portions. Always think about Michael Saylor's fantastic chart where you've got this tiny cube on the top left side with the market cap of Bitcoin, and then all the other stores of value next to it. And I think Bitcoin will eat into that, and maybe 25% can be achieved by year 2035. If you were to then translate that back into price per Bitcoin, you get to close to $1 million maybe maybe $933,000 was the technical or the exact calculation I did. But don't forget there is 3% inflation in it. So if you then bring it back to today's value, it's a bit less than that. But in 2005, maybe something along those lines is definitely not impossible. And that's my base case. Then a less likely scenario, but actually, if the most recent discussions we've had around trade wars and lowering interest rates when you have already no unemployment really, mass deportations, all of that, I think, is done for political reasons. But I think if the tariffs are maintained, and at the moment it doesn't look like it, but let's assume that they would be, then I think the second scenario where you have serious trade wars, where you have AI being more disruptive than beneficial, where lots of people are basically out of a job, and you need to think about things like universal income. Yeah, I mean, that's obviously a very European concept. I think I'm not sure in the US whether you would ever have the income that you get irrespective of what you do just to maintain your life. But in Europe, that would definitely be something to be considered. All these things will cost so much money that I think that would spiral out of control, and you will see much higher inflation, maybe 8% instead of 4% on average. Yeah. If you were to have that, I think then people start not believing that your local currency is stable anymore, and you start having the expectation that inflation is going to be high, and that's starting to become the territory that I've seen in Turkey in the 90s, where you just invest all of your money in gold and in real estate. And nowadays it will be done gold and real estate plus Bitcoin. So maybe you've got 35-40% in Bitcoin. Bitcoin will achieve 35 to 40% of the gold's value. And if that were to happen, you end up with maybe $5 million per Bitcoin. Yeah. And then just the two other scenarios that I find much less likely, where we go back to the 90s, where basically the internet boom led to zero inflation, super high growth. Suddenly the budgets are balanced. We start paying back our debt, and at the same time, maybe there's a regulatory crackdown on Bitcoin across the world. And Bitcoin becomes obsolete, and nobody needs Bitcoin anymore because you start believing in your dollar again, or in your euro, or what it might be. That could be a 10% event. To a certain extent, it would not be I mean, it's not something that the Bitcoin markets want to hear, but it would, for the world, maybe not the worst outcome, but I just don't see that happening. And then there's maybe another 10% chance where you have serious hyperinflation, where governments are at war with each other. It completely spins out of control. You have 100% per year hyperinflation, like you had in Weimar, Germany, like in Argentina, like in Zimbabwe, or in Turkey in the 90s. And then basically, and that was kind of the teaser headline of my post at the time. You would end up with a 2.3 billion price for Bitcoin. But then if you take the inflation away, then the actual amount is not that high. Yeah? But you could have a phenomenal high number. I really hope we won't ever go to that scenario. So I think, long story short, I think we end up with something around 1 million, maybe in 10 years' time, based on adopting Bitcoin on replacing gold to a certain extent. I think that is very likely to happen.
And how do you see Bitcoin adoption on the corporate side playing out over the next decade?
Yeah, I mean, so far we have clearly seen mainly businesses that have been struggling. So I think, except for maybe the early ones like Tesla and Square, if you take the others, all of them had an issue operationally, and then saw Bitcoin as a way to improve shareholder value, and they've done phenomenally well with that, right? So the key question is going to be, what are mainstream, decently run, good companies going to do over the next few years in that space? And I think, coming back to what you said earlier, they will start with a tiny allocation just to start getting comfortable with it. There will be probably more and more shareholder activism to say, look, do you really want to do share buyback? Do you really want to distribute dividends where I need to pay taxes on it? Or why don't you just hold some of it, of some of your cash in your iron reserve in particular in Bitcoin? Because in the end, if you hold billions of cash, that definitely is going to erode over the next 10 years. So yes, even if you don't want to distribute it, then please at least make sure that you protect it against inflation. So I think that there will be more and more coming, and I'm very curious to see who's going to be the first big one that will do it. I don't think it's going to be a Berkshire Hathaway, but they you never know. I mean, they have obviously plenty of cash now that they sold Apple, and I'm very curious what he's going to invest into. He's probably waiting for a crash, but I think we will see some mainstream companies starting to adopt it. I do.
We touched on it a little bit, but can you describe the regulatory environment that you see in London and compare it to New York or the US? As far as you said that the US is ahead of other countries, and then also that maybe there's more regulatory like harshness abroad or outside the US.
Yeah. Look, I mean, what you need to remember in UK is the UK was part of the European Union until 5 years ago. And within the European Union, most of the regulation, the financial regulation, was driven by the UK. So the UK is by far the most sophisticated financial place in Europe. I mean, you've got Paris, you've got Amsterdam, a bit of Frankfurt, but UK is London is far ahead of all the others. So in terms of the politics of the European Commission at the time, it was pretty much dominated by the Brits. And when they left the European Union, clearly they didn't devise a new financial regulation on day one. So they just imported, or they just kept what they had. And that was pretty hostile. And the reason for that was the global financial crisis almost sank the UK. They had to bail out a number of entities, and the quid pro quo was, we pay for your bad debts after the global financial crisis, but you will have to pay personally also. So I mean, I was a material risk taker at UBS, and I had to basically put down my bonuses. So it's a substantial part of my bonuses for 7 years, lock it up, and they could come back to me and say, you signed this document 5 years ago, Baris. Sorry, but that was a mistake. And in the worst case, they could basically take my bonuses. So it was quite an aggressive regime to make sure that the accountability in senior management is high, and that was obviously what was lacking during the financial crisis. So fair enough, but now they realize that having left the European Union, they don't have that many cards to play anymore. So what we see now with the current government is that they are trying to relax some of it, especially because they see that the US has switched back to pro-business a few years ago already, and so now they're seeing that the listings in London have transferred to New York. That's almost like a daily headline in Financial Times that the London Stock Exchange is very frustrated that they don't have any IPOs anymore. All of them, or even secondary listings, they all go to New York because the pool of liquidity is bigger, but also because the regulatory environment is easier. So very high level, I think they are getting there, and I think they're improving it somewhat. The European Union is still quite hostile, I think. So the UK is maybe somewhere between the New York and EU. Yeah, that's where I would see them, and they're migrating towards US.
You mentioned when we talked a few weeks ago that you might be attending some conferences. Any plans to come over to New York or Orlando or Vegas or anywhere in the US, or what other conferences do you have maybe in your travel plans?
So the next one I'm going to is going to be in Switzerland near Zurich. It's a Bitcoin conference where I will be speaking about, I guess, MicroStrategy. People want to understand how that glitch in the system works exactly. Um, I will talk about corporate treasury for corporates, but also for family offices. It's going to be in German, so sorry, can't broadcast it here. But no, I would love to come over. Obviously, needs to be an opportunity. Clearly, there's lots of great players in the US market that are on Twitter that I also follow regularly, including yourself. So it needs to be probably an angle where people want to hear the boring TradeFi European angle to Bitcoin. Then I'm more than happy to come.
Any closing thoughts, and where can people find you online?
Sure. I mean, I'm on X under my name, so Baris Serifsoy. Would love to have engaged in further debates. I try to write thought-provoking things. I'm not always a cheerleader for Bitcoin. I'm also seeing things sometimes critically. That's obviously my baggage as somebody that is not that young anymore. I have lost already lots of money during a dot-com boom in 99, 2000. Those are things that kind of obviously shape you. But I always like to have a debate if it's on these topics. And there's a great community, I think, out there to engage in.
Great. Well, thanks for your time, and thanks for joining us, and we'll have to do it again.
Thanks so much, Tim. Looking forward to it. Take care.